Hi everyone. Today is Thursday, May the 8th, and this is the Moneyball Morning Report for the Benzinga Pro platform. We begin by taking a look at the E-mini S&P 500. My notes before getting to the recording session, we're back to the top of the range. If we break out, shorts are going to be caught flat-footed. We'll go into the 3-day implied volatility move target of 57.48. Remember, the yellow lines are the high and lows of several days in the past of the Globex open, okay? And so that, I'm going to move that down here so that we have that line in the sand. And we can see how nicely these numbers work. They're very important. I love using them. They're a critical part of price action events through the course of the day. It's, as I've mentioned several times, it's getting increasingly important to watch the Globex open as we become more globally focused in terms of trade, not trade tariffs, but trade itself in the futures. So what is the implied move for one day? 56.92. I expect the traders to break that, come into our 56.84. That brings us support. The long was engaged well below these prices at 56.45 or so. The break above the opening range. Stop about 8 ticks wide if you, 8 points wide, unless you were using a prior opening range low, and that cut about 3 points of risk off of that trade. So long action engaged, overnight inventory is long. It remains to be seen whether this is moving up on shorts getting out of Dodge or long action saying, hey, here we go. All right. Martin Armstrong, a lot of people think he's crazy, but, he does say some interesting things. He thinks that potentially we hit a new high if things move as quickly as they could. All right. That being said, low end of the range today should be the Globex high candlestick, and that's 56.47. On the downside, should something go bananas, we're looking at the current last market structure bringing us all the way down to 55.92, which indeed, it was the low of yesterday, but it's also today's implied volatility move for 1 day of motion. Let's get to the NQ. We had a few folks report, and we've got, chip news that is fueling the day. That's pushed the NQ up again to the top of the range. It's also the 2-day implied move. So it's generally outsized. And so there could be a fair bit of shorts getting trapped because the initial target for the implied volatility move for 1 day is 20,134. And right now we sit at 20,200, which, wouldn't you know, happens to be the high of the Globex candlestick for May 4, and traders are trying to hold it. What's the wave action telling us here? Well, here was a high and here was a low. We broke higher, so we've got a structural change. So now we look at the high and the low. That gives us the old highest support. That's why they're trying to come in to buy it. If we cannot get above 20,247, we should rotate down into the area that I consider the value zone. That's going to be where all these traders that positioned implied volatility short are going to make their money. So it could reflexively move in here. The flip side of that is we've got a very steep short moving average, an upward sloping 50. And if shorts get flat-footed, the line above for a 3-day vol move is 20,357. And as we know, the Nasdaq can go parabolic so quickly. We are still well inside the weekly implied volatility move that we calculated on Monday morning, and that was 20,700. So I don't know that it'll do that, but you never know with the Nasdaq. All right, so low end of the range should be the Globex high, which is 19,950-ish. And then if it loses that area, we still expect it to try to hold 19,900. If it does not, the implied volatility move for today is 19,730, but yesterday's low was a fair bit lower than that. It was down at 19,678. The 2-day implied vol move way down here at 19,629. Don't really see that. Trend is certainly up. Momentum, it's flat. It tells us that traders are going to try and revert to some kind of mean that should be the IV target for single day. We trade the YM more on a swing perspective. It went straight up over our prior target here, which, don't you know, since it's a yellow line, you know that that is a low of a prior Globex open. Opening range today, way down here at 41,181. The Dow has really moved, 400, almost 500 points before it started taking a breath. And so that's fairly bullish. What is the formation telling us? Well, if we're looking for price action to give us support areas, the easy thing to do would be to look at what's the prior high zone and then what's the prior low zone. Again, what is that? That's the swing high to the swing low for the pullback where we should see more buyers. All right, but right now we've got ourselves a reflexive move. Notice momentum. It's rotating over, so it tells you the traders are trying to find value as it comes back into the area of trend. High edge, let's take a look at this. The weekly vol, the monthly vol, because you'd have to take these on that space, 39,000 on the downside and 43,200 on the upside. So could this be a lot of magnificent movement? Yes, but if you sold the options here on the monthly, you are just printing cash. So that's a pretty nice thing to know. We might be able to do something like that for those of us that trade futures options. This is the surprise of the day. Take a look at Bitcoin. Bitcoin, not sure what happened here. I know it's some kind of news. I don't know what it is, but absolutely incredible motion outside of the big market structure range. Take a look at it. Here is the low to the high, the high to the low. It came in, kissed about that 50% range, and then off to the races. I mean, we are time framing higher. And this is a classic formation of time framing higher, beginning from down here. Low of from May 6th, swing high on the same May 6th. We had a higher low and then a retest of the high and a lower low that recaptured that swing low. And so it puts us back in this big formation, giving us real support at 96,228. That's where the implied volatility move is on the long side if we come back in to give the edges. Right here, could it kiss 100,000 and stay above it? Well, we're dancing there right now, right? Old resistance, new support. Traders are going to try and move it, but momentum is sort of flattening out. So my suspicion is if it rockets up to the 3-day implied vol move, which is about 101,000, we should see it rotate lower. Okay, that should be it. And what is the rotation lower going to give us? 99,400, so only about $1,000 of motion from where it might go, well, 1,500, maybe 2,000, and then the rotation back so that these sellers of these options can be in the clear. Otherwise, a break of this motion, if somebody's short at 98,000, let's say they're short the option from overnight, and they come into today and they were using the opening range and it breaks through, pulls back, makes a higher low, and then breaches that IV move, they're going to have to buy the instrument to shift their delta so they don't go upside down in their trade. Because being short the calls up here means that they're looking for price action to go down. If it goes up and they want to shift their delta, they have to go and buy the instrument outright. And that's going to push things up. Here we are trying to hold 100,000. Could we? Could we not? I have no clue. I don't want to touch this right now because I'd like to see it stabilize and give me another formation. Now, I trade this for longer periods of time, and so my rotation would be down here at the expected move before it moves to the upside. So I would miss the entire move up here because I think this is a fast trade. If you buy the 100,000 area and you leave your stop, you'd need to have it under this new swing low. So it would be 99,000. So you've got about $1,000 of risk, and you can run it up the flagpole if you like. For me, too much risk. I want to see it rotate back down, especially since it's broken the 2-day implied volatility move already. Oil. Oil, it's running, right? We're still in a very big range, right? We're still in a pretty solid range, but notice the big wave is this one right here. From the low of 55.30 to the high of 60.25. That was the weekly measured implied vol move. The weekly measured implied vol move on the short side on the low is 54.85. Traders look like that's going to work for them pretty nicely. And we have contract roll, so we'll see what's going on here. Could it rise? Yes. What is the slope of the 50? It's up. What is the slope of the tighter one? I think I moved it to 10 because I'm doing some other analysis here. And look at the opening range. Breaks right over it, breaches that high value area from days past, and then pulls back, retests the high of the opening range at 57.93, and it's off to the races. Look at the waves. The next lowest support is really about $58.20. Where's it headed? Well, 2-day implied volatility is $59.85. Does it get there? I don't know, because we've got a couple of waves sitting here, and the implied volatility move for the day is 58.85. We are well above that. So my suspicion is that we come down and we test 58.48 or so. That is the high of the opening range on April the 30th. If it holds 58.48 and begins to bounce, it's got another rotation to the upside. Momentum is still up, so they have not started looking for support yet, but this is a zone that we can say, well, you know, if I look at my 1-hour chart, high, low, lower high, lower low, so I've definitely got some frameworks here I want to watch as potential resistance, right? A potential resistance event. And that is at 59.33. That being said, I wouldn't short this here unless it gave you structure. What the structure looked like, I stop heading higher, I fail support, and then I bounce, and I can't get higher again. So we need a little bit of rotation. Could you do that on a 15-minute chart? Absolutely. Absolutely. You could do it on a 5, 15, whatever, just so long as you're watching it. If, per happenstance, it rotates down, 57.45 would be the space I am looking at. And then we've got a Globex area at around 57.08. Implied volatility move on the downside is 56.82. That's pretty low. Let's go to gold. And gold ticker is not GV, it's GC. Whoops, sorry, wrong contract. We got to roll it forward. So, what are we looking at today? Break, look, high, low, lower high, holding the low. So, we can see that we're in a sideways patch with the big structure right here. What's the best thing to do? Draw yourself. Here she goes. Sorry, I've been using another platform all morning. Draw yourself a Fibonacci and look at it to see if it fails the 50% area. If it fails the 50% area, watch it, it blows off the top. Also very interesting to note, $3,424 is the 2-day implied volatility move. That's for today's price action. So it already moved 2 up, but the weekly IV, 34.25, clean rejection of it. This is a textbook short, right? If you got there late, then you could take the loss of that 50% range. You're going to walk it down to this first edge. We already lost it. So now we get to the second edge, which, could you use, look at the size of this wave, right? 50%. Gosh, I just love trading. Look at this 50% rotation. Low, high, this is the big wave. I just measured the 50% range. Look at where it came into in the overnight. Unbelievable. So what do we expect? A return to the opening range high. That's low. That's 3,371. What is trend and momentum now, though? Momentum is flat but negative. Trend on the tight moving average, negative. Trend on the 50 simple moving average, flat to slightly down, but the big picture is up. So as the traders move down to find value, notice that's the edge that we're watching on momentum. They've moved down to find value. Look at what else it happens to be. The implied volatility move for one day is $3,336. Combine that with the 50% range of the last big wave. Bob's your uncle. It tells you if you're short from here at 3,400, you want to take some profit at 3,340. Absolutely beautiful. Oh my goodness, this is just fantastic. Now, what are we staring down here? We have a little bit of range support and then a little more range support up here, but my suspicion is because the 50 is so far away that a reflexive bounce up into that 3371 area is not out of the question. Let's take a look at SPY. Man, that was pretty. Okay, so here we go. Here's the opening range for SPY. Kind of stuck in the mud, really. Right? It broke out this prior high at $568. It's kind of sideways. This looks very toppy to me, right? Topping formation, however, pretty bullish. Where's the short action going to expand in probability? It's going to be at the loss of the Globex opening hour. And that's going to be, 560, 540, something like that. A short's going to open. Here's the tough thing about taking a short at the low of this edge. The 10 is up, the 50 is flat, and momentum is still up. Could you take it? Yes. But your stop, you'd be in the woods if you didn't at least have it at 68. Better to see it fail the edge, come into the moving averages, hold the last waves. Here's the inventory accumulation event, and then try the long. Where might that line be? It's the implied volatility move to the downside, and that's $561.79. If, per happenstance, these traders continue to the upside, 568, first target, implied volatility move to the upside is 570.88. All right, let's finally look at the cues. Whoa, what's that? I don't know what that's all about. Maybe, I don't know. I don't know what that's all about. But here we are. Bullish, break of the opening range. Look at how a short can be taken from the break of the range, if you're aggressive, into the IV move. Now, it broke it. But look at what it came into. See the heavy congestion sitting in the last hours of the day? That's number one. Number two, we know the 10 is up, and we know momentum is up. We know the 50 is flat. 50 is flat, says we're going to have as much above as below. Where do you take the trade long? Well, if it loses the IV, when it recovers the IV, that's the implied volatility move, above $484.80 or so, you can take it long, right back into the low of the opening range. You can take profit, and then, take your next profit at the prior high, which is 490-ish, or the top of the opening range, which is, somewhere around 489 and some change. I don't know why that's doing that. Okay, so looks like a pretty fun day ahead. Love it when a plan comes together. Absolutely love it. If this chart rotates down, it's got a very big wave it's in the midst of, but notice all this inventory accumulation. My suspicion is this is where it stalls. If we fade, we've got all of this inventory. If we were to say, well, what do you tell me in market structure what that looks like? Well, it's actually the move from this low at 475 to 490, right? And so you can draw yourself a Fibonacci there and see what gives if you're so inclined. Note, oh my goodness, look at that. It stopped dead at that 50. Very interesting. Very, very interesting. Really loving how this market structure study is coming out. Okay, everybody, that's it for me. I'll see you on the streams.